Yo, how you doing? How's everyone doing? I'm gonna tweet the link out. Let's go on my G account for the second time. Okay, second. Oh, oh yeah. You're always first. That's crazy. Sad times. What's up, T-Rick? Give me a second. I'm gonna get the link out to everyone, and then we'll get it going. I'm gonna just chill for a little bit. Give it a couple minutes. What's up, Blaze? Gilbert, how we doing? Ready to see how this week pans out? Yes, sir. All right, let me tweet this link out real quick. Tried swing trading, it's so boring. It's definitely a different feel or acquired taste. That's for sure. There's a lot less instant gratification. There's a lot less yeah, just I don't know, that's the best way to put it. Instant gratification, like knowing pretty fast whether you're right or wrong. You have to really just let your swings work. I think a hands-off type of approach is the best approach to swing trading, in my opinion. Yeah, it's boring, but I honestly think it's easier. I think it's more forgiving because when you're swinging, if you just align with the higher time frame order flow, like you're gonna be in a good spot to see fall through. You know, that alone is a strong edge. Just understanding the higher time frame and trading in the direction of the trends. So if you just are hands off and you kind of have a good amount of your risk managed, I feel like it's more forgiving per se, but it is harder because not harder, but for me it's like there's more work, I guess, because you have to be like looking to enter swings all day long. And for me, I want to mentally be able to like check out. Like that's a big thing for me, is being able to mentally check out after a certain time. You know, we got into trading to be, you know, to have that time freedom. You know, we didn't get into trading to work a 9 to 5. You know, we're trading to leave our 9 to 5, not to start another. And so that's one thing that I think swing trading I don't necessarily love, is like you have to be checking to enter all the time. But we'll get into it in 1 second. Yeah, dollar's very important. Absolutely. What's up, Derek? If we are in a weekly fair value gap but we'll have a daily swing low, can I trade off of it on the 1 hour if it gets swept? If we are in a weekly fair value gap but we have a daily swing low, can I trade off of it on the 1 hour if it gets swept? You just have to understand from the top down what price is trying to do. You know, you might not get follow through on the 1 hour if we're looking to move lower off of the weekly fair value gap. Feel me? So if you're entering like an intraday type of trade, definitely. But if you're looking for follow through on a swing and we're trading into a weekly fair value gap and your counter trend of it, it's probably not going to have any follow through. What are your suggestions on risk management when it comes to 50K? Yeah, so this is risk management, something that's personal. It depends on what you can deal with mentally. So you need to ask yourself, what can you submit to mentally? Like, are you able to see X amount of drawdown and be fine with it? Aside from that, that's one level to it. The other level to it is, how many losses do you want to give yourself? Are you okay with blowing up the account? Are you not okay with blowing up the account? Because with prop, there's different approaches. You know, you don't need to, like, this is what people fail to understand here. I'm gonna go to the charts now and turn my camera on, because I want to get into a little rant here on risk management. All right, so we're gonna rant about risk management right now. Everyone thinks that it's like this one size fits all, like, oh, you need to risk 0.5%, 1%, but there's different goals for different people, and there's different risk tolerances, there's different budgets, there's, you know, prop is a whole different story, because if you want, and I'm not saying this is the right habit to build or a good thing to do, but if you want, you can just blow up a prop account every week and buy another if you have the budget for it. So like evals, for example, like when you're in an evaluation phase, there's literally no reason to trade extremely conservative risk, in my opinion, at least. This is my opinion. I would encourage you all to come to your own conclusions and decisions based on your experiences. But when you're trading an evaluation phase, there's no point in being conservative and trading out of drawdown for 6 months, right? Because if you blow up that account, it just costs you what, $50 to get a new one with fresh drawdown. So like logically, why would you trade out of drawdown and claw out of drawdown for 6 months? I don't know if that makes sense, but it just, people, I don't know. I understand that some people can't consistently spend $50 on an eval every month or every week, and if that's the case, then absolutely claw out a drawdown, make sure you never blow up. But that's just a good example of different situations, different goals, right? For me, I'm not going to claw out of a evaluation phase drawdown for 6 months, right? It's just it's illogical to do that. So in terms of personal accounts, prop accounts, you never want to blow up. You should never be blowing up a personal or prop account, in my opinion, unless you go into that prop funded account and you're okay with risking aggressively. Like, you have to be okay with losing that account. You know, if you're trading prop and that's one of your goals is to be extremely aggressive with your risk, you know, maybe give yourself 5 losses, you might blow up. You might, you know, you just have to accept the risk that you're putting on. And so risk is a very slippery slope, but it depends on like every person and every person's goals. You know, it's not just a one size fits all. Risk 0.25%, risk 0.5%. So that's my rant. That's my risk management rant. Let me catch up on the chat. Also, I don't know if this mic sounds okay. If it doesn't, I'm gonna get a new one because I feel like it's been making some like weird noises. I might have to grab a different mic, or maybe it's the audio interface. But I didn't really answer your question, honestly. I just went on a rant. My suggestion for risk management when it comes to a 50K account with 2,500 drawdown, how I would approach it, I'm not even going to say how you should. I'm going to tell you how I should because, you know, you asked me the question. How I would approach a 50K account with 2,500. Damn, Nightbot's on your ass. I don't care if you spam caps, but I guess Nightbot does. How I would approach a 50K account with 2,500 drawdown is I'd give myself 10 losses, right? So I'd give myself 10 losses of $2,500, and I would just be aggressive with my risk. On eval, I would be even more aggressive. I would give myself like 3 or 4 losses because I don't care about blowing an eval account. When I get to the funded phase, when I get to, you know, a good amount of capital funded, I'm not blowing up ever. If I'm trading a personal account, I'm not blowing up ever. I'm assessing my risk always. But in an eval phase, I don't care because you can just get another account for however much dollars, right? So that's something important to understand. Yeah, I'm not, and let me make this very clear. Let me make this very, very clear. I'm not justifying blowing up a bunch of accounts, like just donating money and blowing up all your accounts and being degen. That's not what I'm saying. What I'm saying is when you're consistent, when you have that consistency and you know how to manage risk, you know how to trade a funded account, you know how to trade a personal account and grow it. There's no point in wasting time on an eval. That's what I'm trying to say, right? For the people that aren't consistently profitable, for the people that don't know how to manage risk, that haven't built the skill set yet, then by all means, you know, learn how to trade and learn how to find consistency on an eval. But like for different people, it's going to be different approaches. That's kind of my rant. So hopefully that makes sense. Start analysis, please, bro. You can stop watching the stream, bro. Like, I don't know what to tell you. I'm not going to get rushed into doing something. Gilbert, weekly OLHC or weekly OHLC, you know, bullish or bearish candle, right? You go to sleep then, brother. It'll be recorded. Blessed Profits. Can you go over SMT, how to use it? Yeah, I could show you some SMT. Maurice Wolfgram, hey, what's up, Maurice? Sally, how we doing? SMT is simply a failure swing. So essentially what SMT does, I'll give you a quick run through. I don't want to go too into detail because I do, you know, want to start the forecast, but okay, so if we have 2 correlated assets, let's say that there's ES, and then let's say that there's NQ. If we have 2 correlated assets, one of them is going to make an SMT or a crack in correlation most of the time to confirm a reversal. So SMT is simply used to confirm reversals from higher time frame PD arrays. So if we're looking for a bearish reversal, this would be the SMT on ES. I don't know why it just disappeared. My template must be wrong. This would be the SMT on, bro. I don't know what's happening. I'll fix that later. This is the SMT right here on ES, right? Because we're having a crack in correlation where ES and NQ are both trading into a higher time frame PD array. ES is failing to make a higher high here, right? So we're having a failure swing where we fail to take this high. So this is a failure swing. This is relative weakness on ES, whereas NQ takes that high. So this is a crack in correlation indicating relative weakness on this ticker. And so if you're shorting, you have SMT on ES, you want to be shorting ES here because it's relatively weaker. Right, ES is the weaker of the two. So that's SMT. But let's get into this. I need the economic calendar really quickly. We always start with that, you guys know. You guys know the drill at this point. I appreciate you guys tuning in, man. I appreciate everyone showing love. If I can have any influence, any shred of improving you guys, if I can influence that, your growth in any way, that's so fulfilling to me. It's so, it gives me purpose. I love helping. I genuinely love doing this, sharing my experiences in the market. And if it helps you guys in any way, like that's it. That's what it's all for. So I hope you guys know I appreciate you tuning in. And yeah, man, I'll never take it for granted. I'm blessed, very blessed. I love what I do, and I'm grateful that you guys tune in. Okay, let's throw the economic calendar. You're hedging. Interesting. Let me throw the economic calendar on the chart here. We'll get into it. my things, you can't see it here. Let me move this to the bottom for now, so you guys can see the ticker. Where is it? My bad, guys. Hold on. It's not going to the bottom. Oh, you know what it is? Sorry, hold on, guys. I'm sorry. I want to fix this, and then we'll get into it. I'll catch up on the chat. I just want you guys to be able to see what ticker I'm looking at. All right, boom. Now you guys can see it in the bottom right here. I'll make it bigger. All right, now you guys can see it in the bottom right. Now my face is in the way. Hold on. Okay, boom. Right here, if you're wondering what ticker I'm on, what time frame I'm on, you'll be able to see it right at the bottom. Okay, let's get into it, man. Sorry if I took too long. Thanks for the suggestion. I keep blowing up my account 6 so far. Right, yeah, so it's emotions. That's all emotions, Tepesh. Or Tepesh, however I pronounce that. I'm at the point of trading where psychology... Yo, exactly. It's all psychology, man. Have you read Mark Douglas's Trading in the Zone? Because if you haven't, I need you to read that. I need you to read that right now. I need you to make a promise to me that you'll read that book right now. If psychology is what you're struggling with and you haven't read it, please read that immediately. Zay, how you doing, brother? Shorted EU as a swing. Nice. Love from Pakistan to Dubai. Thank you, brother. I appreciate that a lot. That's awesome. Thank you, man. I appreciate you tuning in. So I'll trade the day before large news, but I'm suspect, meaning I'm skeptical that price is going to want to move. So if we're pre-FOMC, NFP, CPI, I'm going into that day prior, and I'm saying, okay, price needs to convince me where it wants to go. Price needs to convince me that it has, intention to move, gaps, all of these things, right? So I'm skeptical, but I will trade. I won't trade, I won't hold the trade through FOMC, NFP, or CPI. In my opinion, that's gambling because you can't manage your risk. So I'll trade before, but again, I'm skeptical on those days. Bro, you've helped me, and I'm from Africa. That's so cool. I love that. That's so cool. You're my gym music. Let's go, man. Let's go, Zay. Get a good lift in. That's built different. You're just lifting while you listen to trading stuff. That's built different. Euro. All right, Monday. Let me get into this. Monday, we have Euro red folder, British pound, US dollar, and Canadian dollar. So just looking at this economic calendar off the bat, we have a nice week of volatility. We have FOMC on Wednesday, which is interesting for USD. But this is looking like a very volatile week. I don't know what that drawing was. We're going to try that again. This is looking like a very volatile week of red folder here. So I like that a lot. Monday, we have Euro, like I said, pound, USD, and Canadian dollar. So I'm open to trading any of these currencies, pairs, whatever it may be. I'm mainly focusing on indices right now. And so I'm open to trading indices on Monday. Tuesday, we have no red folder. Oh, no, we do. We have pound, Canadian dollar, and US dollar. I was going to say we have no USD, but we clearly do. So yeah, we have so much volatility this week. This looks like it could be a nice week. Pound, red folder, Canadian dollar, and US dollar. US dollar is pre-FOMC, right? So I'm going to go into Tuesday on US dollar, whether it's majors, indices, whatever. I'm going to be skeptical. So I need price to convince me that it wants to move on Tuesday. We do have red folder, so there could be volatility, but it is pre-FOMC, and price tends to be lethargic and wait up for these big three events. So with that being said, I need price to convince me that it wants to move, but I will trade that day, to answer your question. Wednesday, we have pound, US dollar, FOMC, and then we have New Zealand dollar, GDP, yen. So pound, New Zealand dollar, US dollar, and yen. red folder. So much volatility this week. This is really nice to see. You know, you want to see volatility. You know, you shouldn't be afraid of volatility. When I was first learning how to trade, when I was first, you know, gathering market experiences, all of these things, I was afraid of volatility and news, and I was avoiding it. But if you're avoiding news, you're just never trading, because there's news all the time. Thursday, yen, British pound, and USD, red folder, and then Friday, pound, Canadian dollar, and USD. So we literally have red folder, I think, every single week on US dollar, or every single day of this week on US dollar. Monday, Tuesday, Wednesday, Thursday, Friday. Yeah, very volatile week. I'm expecting nice expansion, so we'll see how that goes. But yeah, that's how you would approach it. So let's talk about dollar, man. Dollar swept this buy side, traded lower, and now we're continuing higher, right? So previous month's high, this buy side, this monthly high on this candle becomes my draw on liquidity, and I'm looking for higher prices. We have 16 days on this monthly third candle. Here, let me make this bigger for you guys. Um, 16 days on this monthly candle. We're not expecting a retest yet. We're going to follow the lower time frame order flow. So if the daily, the 4 hour, the weekly begins to continue pointing higher, you know, we're just looking at a draw towards this buy side and an expansion candle towards that. We're not worried about this monthly candle really right now. Weekly, internal to external playing out after sweeping that buy side, right? So we traded into the monthly buy side up here, traded lower into the weekly area of fair value, and now we're expecting higher prices from here, right? This is really nice delivery here, where if we're going to go higher, we should do so from here, which we have. And so now I'm looking for a draw from internal to external. So from this gap, area for value, whatever you want to call it, to this buy side right here. We should, you know, see more follow through higher on dollar. Like I said, we have tons of red folder on USD this week. So I would like to see, even after this expansion week, just based on what this economic calendar looks like, I feel like we should run towards the buy side and have a large body expansion week. That would be my guess based on the economic calendar. Of course, if that doesn't happen, we react and we, you know, just flow with what price is saying. But that's what my expectations would be going into this week. So that's my weekly analysis really for dollar. You know, weekly time frame, bullish order flow, traded into the area for value. Very, very simple stuff, right? Internal to external. Area of fair value. Okay, now we should seek liquidity. Right, so this becomes my draw. Daily, do we have anything to head higher off of on the daily? We have this small daily gap down here. We have this order block. Expecting bullish dollar, long story short, you know. I really wouldn't want to see if we do get a retracement, we can fall through higher from here, but I would be surprised. You know, I think we might just expand with all the red folder this week. But if we do retrace into here, I want to see higher prices from here. But it wouldn't surprise me if we just continue to expand up without a retracement here. See if the 4 hour shifts. So this is what I mean by the time frames below whatever time frame you're on act as a compass, right? So the 1 hour and 4 hour are going to guide us to whether this is a retracement into the OB and gap, or if this is just an expansion. That's very, very important to understand. That applies to every time frame. So if we're going to just expand here, well, then you're going to see that on the 4 hour. The 4 hour is never going to shift bearish. The 1 hour is never going to, you know, have strong gaps lower. So these 1 hour and 4 hour compass timeframes are going to continue to point higher and respect discount arrays. And that would indicate that we're just drawing higher towards this buy side up here. We're not retracing. Very, very important stuff to understand. I'm bullish on dollar. Indices. Graphics, economic calendar. Some people think economic calendar is everything, but there is no news. Yeah, you just have to react to what I mean, for me, it's just the presence of fair value gaps. You know, when there's the presence of fair value gaps, you know that price has the intention and volatility that you want, right? So news or not, if price is creating large fair value gaps, then you know it wants to move right now. Monthly bullish order flow on indices, 16 days on this monthly candle. We haven't done much yet. Been really, really mediocre price action honestly. But this is what we tend to do at all-time highs, right? So around all-time highs, we tend to consolidate, accumulate, and then just expand. So this is what tends to happen, and it's been really, really sloppy on indices. But you got to make do with it. Or just, if you're trading a filtering process, don't look at it. Look at something else, right? If you're trading an indices type plan where you're only focused on indices intraday, you can still get intraday trades out of this. But if you're trading a filtering process where you need clear higher time frame, you just skip this right now. So weekly, monthly bullish order flow, we're trading around all-time highs. We have this weekly gap right here. This is what I was looking at for a draw this week. This area of fair value here, right? So if we're going to go higher, we should respect this area here, wick it, and then continue higher towards all-time highs. If we fail to do that, that'll be very interesting. If we get a large bearish candle through this, you know, we disrespect it, I'd actually look to target these lows. So I'm watching the reaction from this area here, and I want to see the 4 hour, 1 hour confirm that we're going higher from that weekly area. So that's the important thing here, is I use every time frame as a compass for the ones above it, like I just said before. Daily straight chop. There's just nothing to pull information wise from this right now. Right, so we're expecting lower. This is just straight chop. You know, we do have this swing low. That's fine. You know, we're just expecting lower prices. It's just nothing to take from that on the daily. Going to be pretty similar on NQ. Monthly bullish order flow. We're trading near all-time highs. Yeah, absolutely higher time frame over lower time frame, 100%. When you're in alignment with the higher time frame, that's just, you're going to have bread and butter, low resistance liquidity type trades where it just feels like you don't go into any drawdown and it just flies to your target. Similar area here. We'll see if NQ wants to retrace it. Weekly fair value gap, area for value. Daily, really nothing to pull from here. We're sweeping that high. Again, pretty much the same analysis. Want to see the 4 hour and 1 hour guide us to what price is doing. So if we're going to trade lower towards that weekly gap, well, then the 4 hour is going to flip here. We're going to get our order flow flip. This is going to begin to point lower and should guide us towards this area here. So I'd have these on the wait list in terms of the higher time frame, but I do see a lower draw here on ES towards this area here. Yeah, YM as well. YM is really, in my opinion, showing its hand here. We're about to have a strong, well, we did have a strong bearish close above this bullish candle. I'm actually looking at potentially these lows if we continue to have daily and 4 hour gaps lower on YM. And so, yeah, YM might be showing its hand here early. But I want to see how ES and NQ react to those areas on the weekly. How do you trade on the 1 hour if you have a daily bag, bro? You just anticipate that third candle on the daily to be expansion. So that if the daily candle is expanding, you'd look for a retest on the 1 hour. How do you? I think that, I don't know if I answered that. It's interesting. SPY swept internal. S&P swept internal. On what time frame? What do the CFDs look like? Wait, I want to actually see that. What do the CFDs look like? Yeah, the CFD isn't there yet either. What about NAS? What is it called? US 100? Interesting. Okay. Yeah, YM looks extremely bearish here. So I'll be gauging how ES and NQ. Why are the brokers on TradingView look different to each other? Different data feeds. But that's what I like about futures. Everything comes from CME. pretty much. Not all the futures, but. Okay. Monthly third candle is retracing aggressively here. You have monthly bullish order flow. Weekly, nothing here to head higher from. We're not having a reaction from this OB. Russell as well looks pretty bearish to me. These are looking quite bearish. So could we potentially disrespect these weekly gaps on ES and NQ? Yes, we're going to be reacting if that's the case, right? So if ES trades lower and we just continue to create 4-hour gaps through this and continue to trade lower through it, we're going to be reacting to that. The inverse is true as well. Conversely, if we just trade into this and shift on the 4-hour and begin to point higher, well, then RTY and YM should get in line. So you want to see these indices agree with each other. But right now, YM and Russell are looking extremely bearish towards the sell side. So we'll see. Bullish dollar, right? So I'm going to be looking for lower EU, GU, AU, NU. Monthly breakaway gap. We're on this monthly candle, haven't formed it. Traded below these lows. Had a bit of a reaction here. Shopping on the weekly. We're falling through off of this weekly internal to external. That's really nice. But we swept previous week low and then kind of retraced a bit. I'd still be looking for lower towards this external range liquidity here, right? So towards this sell side. Still looking for lower because I'm bullish dollar, right? So I'm going to be bearish EU. Do we have any daily gaps to head lower off of right now? We do not. Just messing around here on the 4-hour. Still bearish EU. GU as well. Internal to external is going to be the exact same analysis. Bullish dollar, bearish EU and GU. You want to be shorting the relatively weaker of the two. A easy way to assess that is looking at Euro GBP. And so when you can understand where Euro GBP is trading and how it's trading, you'll be able to identify what is stronger and what's weaker. So somebody tell me in the chat right now, based on this candle on the weekly, on the weekly and daily, right? 4-hour, based on this reaction here, what is weaker, Euro or pound? Somebody tell me in the chat. Is Euro or pound weaker based, which is weaker based on this candle? Euro stronger, pound weaker, pound weaker, pound weaker. Yes, sir. Perfect. So Euro is actually stronger and pound is weaker based on what Euro GBP is saying right now. Euro is the base currency. Euro is showing relative strength right now, meaning, you know, if we compare EU and GU shorts to each other, we want to be favoring GU shorts because it's relatively weaker of the two. So when you're trading internal to external and you're framing short ideas, you want to be favoring GU right now based on that strength on Euro GBP. So you always want to be factoring that relative strength and weakness into your trades. It's a very strong added confluence. You know, it's not just, you don't just take a trade based on relative strength or weakness, but you add it to a pre-existing trade idea. AU swept this monthly sell side, weekly, nothing here really. This is a strong monthly liquidity pool that could cause a bit of a retracement. We'll see what happens here, whether it does or not. We still have bullish dollar, like I said, so, but I'm not really interested in this. There's nothing here on AU that's interesting to me. Same thing with NU. Maybe if we create new gaps through this, new daily gaps, you can look to frame something, but right now, I'd just be waiting. Maybe a new daily gap lower could be interesting, but I would just be waiting on these. Still bearish though, because we're bullish dollar. So we're going to be extremely bullish on anything USD XXX because it's the base currency, right? So strong expansion here on the monthly. Traded above this buy side. Nothing really to pull from here, right? We have this order block. We already, you know, have this. we're not expecting this to be traded into. We already have this dealt with essentially. And so now if we're going higher, I would expect it to be from here. I want to see price trade higher from this leg. So potentially higher prices here. You can add that to the long list. We're going to have a daily context to operate within. Monthly breakaway gap. Looking at this is the low hanging fruit, previous month's high as well, right? So they're trading from internal to external here, which is really nice delivery. Yeah, this is nice. USD CHF moved nice last week. Gonna have a nice daily context. I like this for longs as well. This looks good. Pretty big gap, but can still trade off this in the direction of that previous month's high, that buy side right here. That's pretty nice. I don't know about GBP. Just big three on USD mainly. You can look to trade euro and pound. Euro and pound. All right. We had some trapped order flow here on USD JPY. We're now falling through higher. Previous month's high up here. It's my monthly draw. Ultimately, potentially those highs. Weekly. Trading above this SIBI. Disrespecting it. So this to me is failure to offer fair value most likely. And we want to look for gaps higher towards this. So we'll be watching this week high. We don't want to see a sweep of this week high. We want to see disrespect of it, new gaps created higher on the lower time frames through that. But expecting higher prices here as well on UJ. Crude oil looks like ass. I've been saying this for a while now. Haven't touched it. Haven't taken any trades on it. You have to know when not to trade things. This looks disgusting. I'm good. I'm not interested in trying to frame something in this. Look at this weekly chop. I'm good, man. I'm really good. Now the daily is starting to expand a little bit, which is nice to see. But we're about to be at the exterior of this range, so it's very possible we just sweep this and work right back into the range. You know, that is the characteristics of crude oil right now. So we want to submit to that and expect and anticipate that. So it would not surprise me at all if crude oil just takes this high and sweeps right back into the range. I'm not interested in trading this at all. I'm good. Gold's been moving interestingly, right? We have the monthly internal to external, but it's not falling through. Huge wick on the weekly. Pretty weird stuff here. Daily failing here, potentially flipping towards the sell side. Want to see if this OB holds. Pretty interesting stuff here. Kind of 50-50 to me, honestly. It looks very 50-50 to me. I would have this on the wait list. I'm not interested in this right now because I can frame both sides right here. You know, on the monthly, we traded into the bullish fair value gap. We're still respecting it by the wicks and bodies. Really ugly weekly delivery. The daily is not respecting this bullish fair value gap. Close below. I can frame both sides here, and so for that reason, it's low probability to me, and I would just wait. I would be waiting for more information. Silver, respecting this weekly SIBI. We have some chop here. Daily flipping. Silver looks a lot more bearish to me. You know, I can see the arguments more for bearish or lower silver than gold. And it looks weaker to me. So, pretty interesting stuff. I'd be waiting on metals, but we do have this nice context here. This is pretty gross. Look at these weekly candles, bro. Pretty sloppy stuff. But we do have the daily SIBI. Looking at these lows. Bitcoin. Damn. Back to all-time highs. Trading above 100K. Crazy, crazy, crazy. I know the Bitcoin crypto guys are losing their minds right now. I hope people that have big bags in crypto are taking profits off the table, paying themselves out. Daily internal to external played out. We're trading above that high now. There's just nothing right now to frame any ideas off of. We're just kind of moving higher. I expect higher prices towards this previous week high right here, but there's just nothing in terms of narrative to frame something off of right now. So still bullish Bitcoin. It's been flying, but yeah, just nothing here to operate off of right now. We already stung into this. I would expect higher prices from here, potentially just more expansion towards these highs. But yeah, man, do you guys have any questions? Anything you want me to answer? Anything you want me to look at? That's pretty much the watch list. Things that I like. Just let me know if you guys have any questions or anything. I'll run through it. I want to start doing some live trading streams, like maybe one a week on YouTube. I do them like usually 3-4 times a week in the Discord. If you guys are in there, definitely come hop in the Discord. But I want to do like one a week maybe on YouTube. And also, I'm going to get really consistent with YouTube videos. So stay tuned for really, really good YouTube content. I have a video coming out soon, this week for sure. 110% this week, I have a video on draw on liquidity coming out. And then after that, I have one on the off entry model. But I want to get really consistent with YouTube content. And I plan on, ideally, I don't want to make a commitment because I know how I get. But ideally, I want to be uploading one video every other week. So like 2 a month. I feel like that should be pretty obtainable. I should be able to make that happen, right? Every other week. But really good quality videos, not just some bullshit. Sit down, record a 10-minute video talking. You know, I want real good quality edited videos of education. So that's why I think 2 a month, every other week is very obtainable and feasible for me. I show it all the time, Blessed, but essentially just understanding the draw on liquidity from the higher time frame down, framing a narrative. So draw on liquidity is where price is drawing to, either an imbalance or a liquidity pool. That gives me my draw or my bias, bullish or bearish. From there, identifying a narrative PD array. A narrative PD array is just how we're delivering towards that draw on liquidity. So what PD array are we if we're going higher per se? Let me give you an example. Let's break it down. My edge, my strategy is essentially understanding from the top down what price is doing. So we're expecting bearish GU. We have a weekly internal to external. This gives us our draw on liquidity. So we're bearish towards these lows. We're expecting lower prices. This is our boundary that we can work within essentially right here. So from this fair value gap to these lows, we're looking for lower GU. From there, you're looking for a narrative PD array to trade off of in that direction. So if we had stung into the daily SIBI, or if we do, you could frame a 1 hour short off of this. If we sting into the daily SIBI, you can even operate intraday off of that, right? So we're trading into a narrative PD array, and then from there, you're dropping into your entry time frame, whatever that may be. You could be a swing trader, so your entry time frame could be like a 4 hour or daily 1 hour. Could be an intraday trader where you're operating off a 5-minute, 15-minute, 1 minute. But at the end of the day, it's understanding where price is going from the top down, understanding how it's delivering there, and then from there, looking for your entry model. I use the order flow flip. I use the unicorns, but that's pretty much it. You know, at the end of the day, it's just price flipping order flow. And then obviously understanding time, understanding when price wants to move, all these things play into the edge. How do you enter if you have a bag on the higher time frame with a clear draw? So if the higher time frame is bagging, having a breakaway gap is what he means. you want to drop into a lower time frame to look for a retest. So if we're breakaway gapping on the 4 hour like here, you'd want to drop, which we might not even get, but you'd want to drop into the 1 hour or the 15 minute to get a retest, to look for a retest. That's how you would get involved on breakaway gaps. So you're pretty much anticipating those breakaway gaps. So when we see this next candle expanding on the lower time frames, you're looking for a retest of these gaps to trade lower. Show you frame trade. I use SMT, yeah, mainly on ES and NQ, but only when it stands out to me. At the end of the day, in my opinion, I think SMT is good, but if it adds any friction to what I'm doing, I don't factor it in. So I don't want any friction. I don't want any, I don't want any conflict in arriving at my trade ideas with confidence. And so if SMT provides any friction to what I'm doing, I just don't factor it in. But when I see it, for example, say we trade into an internal liquidity pool on ES tags it, and then NQ doesn't, well, then we have an SMT at that internal range of liquidity pool on NQ. We want to be shorting NQ here. And so to me, that's very obvious and a good confluence. So I'll use it. But when it kind of adds friction, I don't factor it in. I don't know if I explained that well, but I don't know how else to explain it. I like SMT though. I think it's valid. It confirms. It's a good way of confirming reversals from higher time frame PD arrays. So if we're trading into this 4 hour SIBI on ES, you'd ideally want to see SMT on NQ or ES to confirm this reversal. It's a cracking correlation between correlated assets. So one will sting it and make a higher high above this 4 hour candle. The other will fail to sting it and make a lower high, indicating a cracking correlation, kind of confirming that reversal. And so in my opinion, the best way to use SMT is at internal range liquidity pools. I think it makes the most sense. It's the most obvious. It's the most clear. That's the best way to use it in my opinion. So basically from fair value gap to liquidity pool like this. So internal to external, pairing that with SMT is very solid. I like that a lot. Someone who talks about that a lot is Sniper as well. Sniper is awesome. I know he's a big fan of internal plus SMT. Definitely a very, very high probability way. But there's many ways to trade, right? So I don't always need to trade internal to external. I could even trade external towards internal, right? So I'm not demanding only one thing like that. I'm very open to trading multiple, like pro trend, counter trend, internal to external to internal, etc. The crosses I haven't been watching. I can look at some crosses if you guys want me to for a little, but I haven't been trading or looking at the crosses. This camera's crazy because it just follows me. I love it. That's wild. You guys can see my desk a little. I have 2 monitors right here. I just have a dual monitor setup. I like it. It's really nice. But yeah, man, that's pretty much it. If you guys don't have any questions, we'll pretty much wrap it up there. If you guys haven't joined the Discord, definitely join the Discord below. I feel like it's a no-brainer. There's a free version of the Discord as well where I provide a tremendous amount of value. So I don't know why you guys wouldn't join, the free Discord. There is a premium version as well, Trading Patiently Academy, for the people that want to have a more hands-on mentorship type vibe. You can join that as well. But if not, no worries. I have the whole free section of the Discord that has a ton of value in it as well. So yeah, man, I'll drop the link to the Discord right here. If you guys aren't already in it, make sure you join. I'm assuming most of you are, if not all of you, but there you go. Read Mark Douglas's Trading the Zone. Let me show you. Let me actually show you that what I preach, I practice. Okay, hold on. Actually, it's over here. I've read this front to back like 3 times. Highly, highly, highly recommend you read this. Okay, read this book right here. Trading the Zone by Mark Douglas is, in my opinion, the best psychology book that you will ever read. In my opinion, I would read it. Don't research it. Don't look at YouTube videos. Like, you can watch YouTube videos on Mark Douglas after you've read this, but first, read this front to back. I think it'll really bake it into your brain. It'll resonate more if you read it and put that time in. I think that'll really help with emotions. Anytime I feel like my emotions are off, I read this. It's just the best book. It's the most consistent way for me to keep my brain in check, because what this book does is it gets you operating out of a probabilistic mindset, and it allows you to frame your trade ideas in the best way possible because you just allow them to work. So I highly recommend you guys read that book. Like I said, I've read it like 3 times. I'll probably read it again. I love that book so much. And his YouTube videos, like, he has seminars and stuff on YouTube. They're pretty long, but I listen to those before bed as well. So Mark Douglas is awesome. Highly, highly recommend that. If you guys are struggling with emotions or psychology, you read that book front to back. I mean, it's a necessity, in my opinion. Like, you have to do it. It's amazing. Which broker should I use for Forex? I like Oanda. Forex.com is good as well. I've always used Oanda. It's been very consistent for me. I'm also from the US, and so Oanda is just the best option for me. But Forex.com and Oanda are very good. I see a lot of people use Forex.com as well. But those are the 2 that I would recommend. I used Oanda when I was trading Forex. I haven't been trading it recently, but yeah, Oanda gave me 0 issues. Awesome feed. So highly recommend Oanda. And yeah, man, that's pretty much it. I love you guys. I appreciate you guys tuning in, showing love. Like I said, if I can provide any value, influence, allow you guys to grow as traders in any way, that's what it's about for me, you know. So very, very grateful to do this. Grateful to have you guys tuning in, and let's have a good week, man. If you haven't read Trading the Zone, read that book. Get your mental in check, because no matter what strategy you have, if your mental is not in check and you can't let it work out, it's not going to make you money. You know, it could be the most profitable strategy in the world, but if you can't allow the numbers to work because your mental isn't right, you're not going to make money. So make sure your brains are in check. Let's have a good week. Detach from the outcomes of every trade. Focus on the process. Focus on your system. And yeah, guys, appreciate you tuning in.